So, welcome back to another video. Today, we'll be discussing about the topic financial feasibility. So, starting with the video, the concepts that we are going to discuss today are first business planning and its importance, concepts of a financial plan, how to create a financial plan, the importance of having financial projections for your business, unit economics, and cost and revenue. So, component of a business plan, that is business model versus business plan. Business model describes how an organization creates, delivers, and captures value in economical, social, cultural, and other contexts. Whereas a business plan is a document that details the organization's strategy, expected financial performance for years to come. The template of a business plan consists of three pillars. First is the sales plan. A sales plan is a strategy document that lays out a company's plan for improving sales results in a specific time period. It requires you to take calculation of market size, top-down and bottom-up approach, and conduct the following steps. That is, build a sales forecast, create a customer acquisition funnel. Okay. So, people and hiring plan. People plan aims to estimate the people's requirements for your organization to fulfill the sales forecast based on the customer acquisition funnel. While creating the people plan, you also need to estimate the budgets for the new hires based on the required skill sets. Financial plan. A financial plan is a comprehensive picture of your current finances, your financial goals, and strategies to meet your financial goals. Steps in the financial plan include the first is to calculate setup cost, forecast profits and losses, work out your cash flow projections, forecast balance sheet, find your break even point. Coming to the sales plan forecasting, business plan begins with the sales plan. A sales plan consists of a sales forecast and a plan to achieve the forecast. A sales forecast is a projection of the number of units of products or service you want to sell in a given period of time. Sales planning is divided into two parts majorly. Forecast for your sales for the next 1 year. Second is plan the number of leads you will need to meet your sales target. Forecasting. While completing your forecasting, refer back to the two approaches we employed in week. There is a top-down approach and bottom approach. We use bottom approach to arrive at a realistic estimation of market size. Create your sales forecast from there while ensuring that you take into account both your capacity and ambitions. You can employ the following methods for forecasting. That is first lead driven. Based on a market research data from the previous year, analyze each lead and assign a value to that source. Length of sales cycle. Analyze how long a lead takes to convert to a scale. Intuitive, that is, trust your salespeople to accurately forecast their own sales. And next is the test market analysis. Limited launch of your product to analyze the response. Use the results of your analysis to make a clear, accurate forecast. And historical forecasting. Use past sales data to forecast sales considering stable growth. Sales plan, customer funnel. So, customer acquisition is a process of gaining new customers. An acquisition funnel is a place or a process where you turn your prospects into actual customers. This is a crucial step in your venture creation, hence, do analyze your target customer very carefully. Make sure you have enough prospects leads at each stage of the funnel so that enough remain at the next stage. Okay, so the funnel goes like this. First is the target market. How many people have the problem that you want to solve? Consider your niche you had identified earlier. Second is the leads. Reach out to a subsection of the target segment. These become your leads. And then the prospects. Some prospects will show interest. These are your opportunities. And the next one are the your customers that you convert from those prospects. At the product slash service front, once the prospective customer signs up with you, you must ensure that your customer is able to connect with the actual product and the promises made in the unique value proposition block of your business model are met. About 80% of your customers will come from your target segment or niche, but some may be outside the target segment also. So keep your eyes and ears open. Make sure you follow up with your customers, take feedback to make further enhancements to your product or service. This delights the customer, and there are chances that you get more customer referrals. If your conversion rate is high, then you should concentrate on it to increase the number of people entering the stage of your funnel. So ensure you have enough number at this stage of the funnel, which will ultimately generate the revenue for your business. The last stage is the funnel customers. This is very crucial at this stage, at the stage where you get paid. So ensure you have enough numbers at this stage of the funnel, which will ultimately generate the revenue for your business. People's plan. Before you begin working on the people plan, find out what skills you already have in the team. Consider the following questions. Does the existing team have the technical ability to build a product or solution? If yes, how many units of the product or solution can they build in a month? Does the existing team have a sense of how the industry operates and what value your product and service can add to the industry? Is your team capable of handling the packaging and delivering your product or service? Do you have anyone to handle the accounts, manage payments to suppliers, payments for customers, and salaries? These are the questions you need to answer. Here's a guidance to create your people's plan. First, number. How many people you need to achieve the goals that you have set in your sales plan. Second, hiring. Consider hiring people as consultants rather than employees. Are there any roles you may need for a limited number of months or for a limited number of hours in a week? Third is the skills. List the exact skills you need for the team members you want to hire. Budget. Set a budget for their salaries. Offer pay packages as per the industry standards. Neither too low nor too high. Research the kind of salaries people draw for a particular skill set and experience level in salary calculator websites like salary.com, knowyourworth.com, salary serve, etc. How to find the right talent. Look for potential candidates for your venture among your own contacts. People who join new ventures need to trust their founders of the venture. So if the candidates express interest, you will already have a connection and trust. Use social media platforms like LinkedIn, etc. to find good talents. Find a good balance of the young and enthusiastic and the experienced and mature in your team. So next is the financial plan. A financial plan is a forecast of the future performance for a business. It is the third part of your business. This includes planning your expenses, how much to plan to sell, your profits, and your plan to spend cash to meet your expenses. A financial plan will help you plan and optimize your expenses, startup cost, fixed cost, and cost of goods. Plan and manage cash flows effectively. Estimate your income and profits. Essential components of a financial plan include first one is the startup costs. Startup costs are the expenses incurred during the process of creating a new business. Examples of startup costs include licensing and permits, insurance, office supplies, payroll, marketing costs, research expenses, and utilities. Second is the forecast P&L. A profit and loss forecast shows your company's expected revenue and expenses over a given period of time, demonstrating whether you can expect to make a profit or a loss over coming months. Cash flow. Cash flow is a measurement of the amount of cash that comes into and out of your business in a particular period of time. Cash flow statements help track and analyze to determine the liquidity and solvency of the business. A healthy cash flow is required to fund your payroll, cover your overheads, pay your suppliers, and purchase equipment. Balance sheet. Balance sheet is a financial statement that reports a company's assets, liabilities, and shareholder equity. The balance sheet is one of the three core financial statements that are used to evaluate a business. It provides a snapshot of a company's finances, what it owns and owes as of the date of the publication. Break-even analysis. The break-even sales level is the number of units that must be sold in order to break even. This means that revenues are equal to expenses. Any units sold beyond this quantity will allow the company to generate profit. COGS. COGS, or I should say cost of goods sold, refers to the direct cost of producing goods sold by a company. This amount includes the cost of the material, labor cost directly used to create the good. It excludes indirect expenses such as distribution costs and sales force costs. So here are the calls to action that you can use. First one is create your sales forecast. Second one is create your customer acquisition funnel. Third is the build your people's plan. Fourth is the create your financial plan. Okay, so coming to the next part, which is the unit economics slash key metrics. Unit economics describe a specific business model's revenues and costs in relation to a individual unit. Unit refers to any basic quantifiable item that creates value for a business. Thus, unit economics demonstrate how much value each item or unit generates for the business. Step 1 is defining a unit. For an airline, a unit might be a single seat sold, whereas a ride-share app would define it as a one ride in their vehicle. Those units are The analyze to determine how much profit or loss they individually produce. Some businesses require multiple unit measures. For an example, an infrastructure service provider that has a geographically distributed physical infrastructure have significant capital investment for each new development. As I said, this business should use each unit of physical infrastructure as their core unit, and within each use a customer unit as a secondary unit. Step 2 is calculate your cost of good, or we should say calculate your cost of services sold. Third one is the LTV and CAC ratios. To calculate unit, you need two values. The first one is customer lifetime value, that is the LTV, how much money a business receives, money a business receives from a given customer before the customer churns or stops doing business with the company. And the second one is the customer acquisition cost, the cost of attracting a customer or say client. Customer lifetime value is equal to the average value of sale into number of transactions into retention time period. Higher the lifetime value, the better it is for the business. So increase LTV, increase average sales of average sales margin needs to go up, and number of transactions should be increased or retention time period to increase. Customer needs to be engaged. The second is the customer acquisition cost, which is equal to the total expenses to attract, engage, and convert a new customer divided by the number of new customers acquired. Interpretation, what we can interpret from this is that if your CAC is less than your LTV, it indicates that your business is strong. If the two metrics are equal, it likely highlights a stagnant business. If your CAC is greater than your LTV, you are looking at a financial loss. So the call to actions include calculate your unit economics and key metrics, that is the gross margin, net margin, COGS, CLV or LTV, CAC, CLV and CAC ratio. Second one is creating your funding plan. So the next topic that we are going to discuss is MLP, or we should say MVP, minimum lovable product or minimum viable product. That's what we are going to discuss today. So the topic simply, what is an MLP, the difference between an MLP and MVP, how to build an MLP, what are the different types of MLP that you can build. So coming to the first part, that is the introduction to minimum viable product. It is commonly believed that the top two reasons startups fail is because there is no market need and they run out of cash. These reasons are mental gymnastics to avoid a plain truth. Startups fail when they don't build a simple solution to a problem many people have. MVP is that version of a new product which allows a team to collect the maximum amount of validated learning about customers with the least effort. It is a product with enough features to attract early adopter customers and validate a product idea early in the product development cycle. In industries such as software, the MVP can help the product team receive user feedback as quickly as possible to iterate and improve the product. It is based on the lean principle, build, measure, learn. The goal is to build a version that the customer can test. While testing, the creators can observe how the customer interacts with the product and ascertain which features are considered valuable by the customer and which are not. Features of MVP are the product contains enough features that it will be purchased by the customer. Second is it will never have a feedback mechanism. It will have a feedback mechanism that allows the user to send their feedback about the product. Third is it should have enough future benefits for the early adopters. Fourth is it should be a product that the customer is willing to purchase. So building your MVP. MVP is a lean startup technique where you build the mock-up of the solution, present to your customer for feedback. Remember, you had identified and top three features on the solution on the lean canvas. Also, you had identified the important features of the competitors are offering in the competition analysis. To be you are certain about top two three features of your startup, you need to formulate and test a solution. Remember to invest a lot in building a full-fledged solution is a waste. So it is recommended that you test the solution with a demo before building the actual product. MVPs play a significant role in market research for a new product. It helps the entrepreneur achieve the following goal. First is test customer experience, faster release time, save costs. Okay. So here are various steps to define the MVP. First is identify the specs you want to test. Second is set a timeline with which you want to test it. Third is be thrifty. Try to do it in the lowest possible cost without compromising. Okay, here's a simple way to rank product features. First, we divide in four columns and two columns and two rows, consider four cells, and we divide them according to the high impact, low impact, and low urgency, high urgency. We'll keep urgent and high impact products on, let's say, this side, not urgent and high impact products this side. That are debate. Urgent and high impact products are included in the MVP, and high impact and low urgency are on the debate side. Low urgency, low impact products are not even included, and high urgency, low impact products are revised from MLP to from switching from MVP to MLP. It is the first time hearing the word MLP. You could think of it as the advanced version of MVP. An MVP is the minimum required version to test the product or service. Many companies create a MVP as a way to launch a product with basic functionality quickly. To test the true market demand, however, delivering the bare minimum can sometimes give false indicators, as some products won't have the same testing environment unless they are fully functional. This is how the idea of having a lovable product was born. A minimum lovable product, or share MLP, is an initial offering that users love from the start. It represents the minimum required for customers to adore a product rather than merely enjoying it. To understand the concept of MLP better, it's just an integral that you understand what an MVP is and what it is not. And MLP is not a proof of concept, a prototype, a half-baked version of the product, or a cheaper version of the product. It is not building multiple minimum products or hitting some magic release date. MVP, this is a version of your product that you first launch for your customer. It has the bare minimum number of features to solve their problem, and it is most commonly used as a testing tool only. MLP, minimum lovable product, similar to MVP but with more thought and care taken in design and UI. It aims to solve the problem but also delight. MMP, that is the minimum marketable product. This is the version of your MVP or MLP which will push to the market. So MLPs. Now, if you want to create a MLP for your business, what you would choose? Well, that depends on the type of your business and the service or the product that you can provide. This diagram below depicts the difference between MVP and MLP. So MVP is functional, reliable, usable, emotional design, and MLP is emotional design, usable, reliable, functional. And but this in the MVP, this is not this, that is this is not functional, and MLP, this graphic does a great job for putting about the MLP. So it is not just the functional side of your offering, it's also about getting a base taste of every aspect of what makes your startup lean. So next topic is about MLP testing. Two key questions you need to ask yourself while testing an MVP. First is, what is the riskiest assumption? What is the smallest experiment I can do to test this assumption? Building your MVP is an iterative process, and in all probability you cannot get it right in the first instance. Once you conduct your interviews, the next step is to refining your MLP. But before you start that, it is important to analyze the interactions and convert them into intelligent, actionable process. Start with hypothesis less risky assumptions. Analyze the data, the customer codes, the observations from the interaction, the verbal and non-verbal cues. Cluster your learnings and check for cross linkages, patterns, and common themes. Arrive at a conclusion. Is your hypothesis proved, disproved? In conclusion, refine your MVP and move on to the next hypothesis that you need to test. Developing and testing MLP. Next stage is developing and testing your MLP. Again, the whole idea of the creation of an MLP, testing the concepts you're trying to validate. So always keep this as your goal. Some pointers for building. If you are building your business, your MLP needs to be better, focus on functionality and reliability. If you are building for customers, focus more on usability, emotional design. Thinking about how your product's adoption is going to change the customer's current system in use. Think of the easiest way for the customers to transition to your product and integrate seamlessly. with all the systems already in place. If you are a company with a great brand name in the market and you want to do an MLP test with a new product, use a pseudo brand name and do the experiment in a separate sandbox. Once the MLP is successful, you can integrate the product with your current brand so that a failure doesn't hurt your brand reputation. So here are your call to actions. So this is the first, build your MLP. Second, test your MLP. And the next is analyze your data, source of data, cluster your learnings, arrive at a conclusion. Is your hypothesis proved, disproved, in conclusion? These are the call to actions which that you can follow. So yep, here we end our today's video. This I'll see you guys from the next video. Yep, thank you. Bye bye.